Hey guys, it's Rombo here. Sorry I've been out of commission. I was not feeling good for quite a while. So, um, and then, this is a teaching lesson, so I'm going to be talking about trend lines today, maybe support and resistance. Um, and you already know about deviations, but I might throw that in at the end. But going by that, lesson number one: when you're sick, take the day off. I don't care how well you think you know a stock or the market, and especially if you're not experienced, don't trade. You're not thinking right, and you have to be on top of your game when you're doing this mentally. So uh, I went in yesterday in a really bad trade, and luckily I got out pretty much unscathed. But I was lucky. So, but with that said, trend lines. I saw a lot of people in the comments wanting me to do a lesson on trend lines, how to set them up, um, and how to use them. And so I thought I would do that here while I'm kind of bored. I'm been kind of watching everything, but I've been staying off of Discord and everything just because I'm still not up to snuff. And now my wife's sick, so you guys pray for her too. We've been hit pretty hard. So, but I thought, well, I might as well get this out of the way. I think I'll be able to do this. So, enough of my rambling. A trend line is just a way of spotting resistance points, okay, and marking a line between them. So you go from the highest point down to the lowest point of a trend. So obviously the price is going down. So here's your trend line. So it met resistance here, it met resistance there, and so there's your resistance line. So let's say we were right here. Okay, maybe actually, let's change that here real quick. Um, Initially, you could have put the trend here. So you start seeing down days, down days. So you put the trend there. Oh, it broke the trend, but look, resistance, 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 down. So when it starts going down, you're like, okay, we're still in a downtrend. You come here. Okay, resistance breaks. Oh, here we go. We're going to go up. No. Remember what I said. This is called the stage 4. Okay, stage 1 is breaking even. Stage 1 is kind of starting an uptrend. Stage 2 is coming up. Stage 3 is down. Stage 4 is at the end here. I think that's right. I'll look it up, and if I'm wrong, I'll tell you later. That doesn't matter. So we break the trend. Now we start coming up. All right. So it's like, okay, maybe we have an uptrend. Well, now remember, a sign of an uptrend is one of the signs of getting into a trade is it breaks a trend line. Usually there is you can have a moving average in here that is kind of low right here, and then maybe it starts swooping down, and maybe it starts to get even with it, or maybe even comes up a little bit. Maybe right here it breaks even. So now you're all excited. Because now we're going up. That doesn't mean that we're in an uptrend. Remember, you want it to break the downtrend, cross maybe the 20 moving average, simple moving average, and then you want to see it as it goes up, like right here. Great. But then you want to see a down swing, and then have it start to go up again and break the previous high. There's your entry point. Okay? That would be an upswing, and here's a really good example of why you have to Pay attention to that, because here we broke the downtrend, uptrend. Okay, higher high, barely, pretty much even though with here, so it meets resistance right here, right? But right now we're just looking at this for the example. So now what we want to do is see a higher low, right? Here's the low, and we would want to see it come down and break here and start coming up again. Then I'd probably get in after the high, okay? But what happens, right? It starts going, it goes down even farther, putting in a lower low. So now what happened was, all it did is it broke the previous trend line, but now, so what we do is with the trend line is we take, if I could find it here, there it is, and we move it to the next highest point. Okay, now we can learn things from that. Okay, what can we learn? Momentum. Okay, momentum is when the trend line is really steep and then it gets less steep. Okay, so that means things are starting to weaken. So more and more shallow these downtrend lines become is a sign that things are starting to weaken. Okay, now also what you could do, if you would like, is to put support lines in here. Oh, that one's not right. So you'd have it right here and right here. So this is more of a channel. Okay, so here it was pretty steep. Well, now we have another low right here. So now we take this bottoming trend or support line, and notice this was steep. Now this is getting more and more shallow. That again is a sign of things slowly changing. Think of trend lines kind of like moving averages. Okay, when moving average is going down like this, well, everything's going down. But when it starts to shallow out, that usually means things might start to change. And then when they start going up, then we're in our upswing, okay? And trend lines tell us other things also, okay? And I've said this before in my other videos. We have a downward wedge, okay? What does a downward wedge mean? It means it usually, the price action goes away from the way the arrow is pointing. The point is pointing down, we come up, okay? So that is what they call a descending wedge or a bullish wedge. And when you have an ascending wedge, then you have the exact opposite. And you have your wedge coming up this way right here is pointing up. Not every single time, 78% of the time it will follow that pattern, okay? So that's where you get your support or your trend lines from. Some of the rules with trend lines, you don't want to be cheating. And what I call by cheating is, have it right, have the trend line right here. Well, doesn't make any sense. Look, you're going way on top of this high point right here, okay? Now you're like, well, Ron, you're away from these high points right here, but see that this was already a broken trend. So then things change. This is now a larger trend that's setting up. Another thing is you don't want to cut through lines also. Like, see, this dissects this move right here. That's not an appropriate wedge either, or I'm sorry, a trend line. So that would be a good bullish sign to get in. And Here we break out, we consolidate. Now usually after it breaks a pattern like this, there is a thing called meeting the point. And what usually after it breaks out, it tends to want to come down again and try to meet the point right here. It doesn't always do so. Obviously it didn't here. It came down a little bit. Sometimes it does meet, sometimes it only comes down a little bit, like right here, and then you have your move. Okay, so trend lines are very, very important for many reasons. We have, like what I say with the moving averages, those RSI indicators, MACD indicators, they are lagging indicators. In other words, they only tell you what has happened in the past. Okay, now deviation lines, Fibonacci levels, and trend lines are forward-looking potential move indicators. Okay, they do not predict exactly where things are going to go and what's going to happen, but they do give you an idea of what is taking place. So here we could, after it broke that trend, we could have set that up right here, and have a wedge pattern here, which we do. Okay, here's the support, here's resistance, it breaks out. Now this right here is pretty much symmetrical. It's not pointing down, it's not pointing up. Usually, most of the time, this is what they call a continuing wedge. When it's even like this, if it's coming from up above, it will continue downward. But look what happens. It doesn't do it this time. Okay? Usually, mostly because the overall bigger move was a big bullish wedge. So that's why most likely it did break to the upside. That's something when you're doing this. Now this is on the daily chart. Okay. Oh, by the way, this is on AFRM. By far one of my most favorite stocks. I love this stock. That's an inside joke. But we're not going to go there. So once it breaks here, once it breaks this trend line, then we start moving our trend to the upside after it breaks that trend. Okay, so we could probably have our trend line right here. This we probably move to right here and to the lowest point. Now here we go again. If I bring it right here, see how it breaks that? You don't want the trend represents the support. Well, the support is here, it's not there, right? So you put it down. Okay, there you go. So that would have been it. After it jumps up, comes down here, then you take that trend line, you move it here, and now look, see how it cuts? So you can't have that. You have to go to the closest low, which would be roughly about right there. There's one quick down trend right there. Well, let's just do it the way it should be. Right here. Right here. There we go. So now we have this longer term trend line. Now this is called an ascending open wedge. See how it's opening wider and wider? That is a bearish. Okay, I think of opening wedges like regular wedges. So if it's the opening wedge is facing up, the price is going to go down. If it's opening going down, it's going to go up. Okay. So now here we have this trend. Let's say we found this and we made this trend line right here. So this would be on October 16th. Okay. So you want to get into it. You get a little FOMO. You see it break this resistance line right here. Now we get into resistance patterns. This is obviously, this would be kind of like trend lines, except they're horizontal. Okay, so we have our horizontal resistance, and we have our horizontal support. That's not perfect, but give me a break. I'm tired and I'm sick and I'm old. So once it breaks this resistance right here, we're away from this trend line. Get in, be happy. Now there's other things that I'm not going to get into today, but you see a big topping wick right here. That's usually a sign of a trend change. This is trend lines. And what happens here, it breaks down, gaps down huge. Then all of a sudden we get a couple blue days and everyone's like, hey, we're going to the moon, we're still going up, we're in an uptrend. No, we're not. We broke the trend. What happens? It tries to get back in, and then boom. Okay, so this is the importance of trend lines. Again, you don't want anything to be above the trend line for a resistance line. You don't want anything below the line for a support line, else you're not doing it right. Now here we are live as we speak here at 2 o'clock in the afternoon. So we could take this support and put it at the lowest point right here. Take this and put it at the highest lowest point, which is right here, not up here. See how all these are underneath that? That's what these lines are for, guys. They're so don't cheat them. They're here to help you. So about right here and about right there. Okay, I count the wicks. Some people don't count the wicks. They go by the bodies. I count the wicks. Okay, so there's your support, and then here's your resistance. Okay, we got it about right there. So, if I put it right there on that wick, there's a couple peaking right here. Okay, now we don't want to put it here. Why? Because none of these are touching. So you put it right here, and what does that say? Okay, AFRM was going down, consolidates, and consolidation is great because what does it do? It moves horizontally and it gets you through the downward trend, which is exactly what AFRM has just done. Okay, now we have a low here, and now we'll wait for the high to finish. We don't know where we'll run. It's finished. It's right here. No, it's not. It could come up another day, and then it could do this. All right. So hold your horses on getting in. You don't get in just because the trend changed. Remember what I said back here. On this move right here, it broke the wedge, or the downward resistance trend line, came up, and then boom, tanked again. Okay, so, and especially since it has this in its history, again, something very important to know. Oh, this has a tendency, this has a history of breaking the wedge, putting up a high, and then tanking again. Okay, that can happen. We have we do have some support right here. So it's support right here. So we'll wait and see what happens with the firm. This isn't a video on a firm right now. I know it's what I like to do. I'm sorry, but so we're gonna wait and see what happens. Now, what we want to see is maybe another high day, maybe even another high day, and then a low day, and a low day, and then a high day. So now what does that do? Here's your low, breaks the trend line. Let's say the moving average is coming like this. It breaks the moving average. We have our lows here, and then it bounces, and now we have a higher low. We have a higher low, we have a higher high. Okay, it broke it broke this support, or at the time this was support. Now support becomes resistance once you're underneath it. It broke that resistance. We have higher highs and lower lows. That's a good time to get in. Okay, So now what we could do with the firm, it did break the trend line, but we keep this here because why? Very easily the next day, tomorrow, it could tank and come back under. Okay. So we keep that there. It hasn't set. Now I'm doing this solely on the daily chart. If you're doing a swing, then you're going to be looking at a different chart, but it's all this, you do it all the same way. If you're doing this for a day trade, this could be during the day. You set these up. Okay. So now, but what we can do is now we have, so far we have a low here, but now we have a higher low right here. Temporarily, we could take this support line, and we could come over here and move this down here. So what does that tell you? We had a downward support line, now we have an upward support line. Okay, now if this starts going down, whoops, did not want to do that. If we come back down below this trend line and it keeps going, then we redraw the support line, like right here, and might create actually a wedge pattern then, which is a downward facing wedge, which is a bullish move. So we'll wait and see what happens with a firm in the long run. But right now it did break this trend, and now it has a support line going up. So that's the way that you use trends. Remember, number one, no peaks above. Now, if it's just a little rinky-dink, wick that barely comes across, that's okay. All right, but you want to keep it what I call clean. You want this trend clean. Okay, you want your support lines clean, because see, you don't want to try to tell the chart what you want it to say. That's what gets you in trouble. You want to keep things clean and let the chart tell you what it says that it's doing. Okay, because that gives you the proper idea of what's going to be happening with the stock. So that is the rules of trend lines. Support lines, pretty much the same way. You have your peaks are your support, your bottoming, or I'm sorry, resistance. Your bottoms are support lines, and they will give you an idea of when to get into trades and when to get out of them. So that is enough of trend lines. And what else was I going to do? Possibly, I think I was going to do deviations next. Let's see, because that is kind of, it's more like trend lines, more or less. So it tells you, it's more of a kind of a future look of where you have, well, more support resistance than trend lines. So we can, let's see, on the 5-day, 15-minute, well, here we go. Okay, here we had the support coming down. It broke support. It goes over the SMA. Good time to get in. It bounces, hits the SMA, and goes up. Okay, so that's now this is the 15-minute chart instead of the daily. So again, I'm just going to do it this way. It's be a little faster. You have your trend coming in here. It broke the trend above the SMA, higher high right here, higher low than down here. You get in, boom, rip, easy money. Okay, breaks the trend line, Okay, let's see here. So now you put in your trend line going, here's your support line. Okay, what happens now? It costs you, but now you're looking at it as a bear. You would have gotten out here, but now as a bear, it breaks the support line. Boom, comes back up, rips down again. Very, very nice. Now we set our trend line as such. Well, be easier if I had my Thinkorswim up here, but kind of about right here. Hits the trend line, comes down, hits the trend line, consolidates, breaks down. Sound familiar with what's going on with the firm on the daily chart? Here it broke and then it came back down, breaks the trend, breaks over the SMA. Of course, now you might, after it breaks this support line right here, you might get in right there. You're above the moving average. You broke the trend. You're on the way up again. Okay, now what happens? You can set a support line here to go up here, like so. Let's say you put it right here. It breaks the trend, breaks under the SMA, downtrend. So now, for the day, for a firm, let's say I want to maybe power hour. I'm thinking it's going to come up. Well, right now we're in a channel. We're going down. If it breaks this downward support, we're really going to tank. We consolidate maybe throughout the rest of the day, and then tomorrow, we could have another up day. Why is that? Because usually stocks that finish high, it's a good momentum sign. Here, we started here, finished relatively high, not on the, well, yeah, we did, right on the high right here, this candle. Boom. Okay. Finished relatively low on this day, finished low. So very volatile stock. So I'd like to see what happens with the firm tomorrow. We finish relatively high. Maybe at the end of we're putting in the blue candle right here in this 15 minutes. We got 3 more candles to go. We'll see what happens with the firm. This is resistance right here. So we'll see what is going to happen with the firm tomorrow. Then we have our deviation lines. This is the average. This is the average price. Now this is if you're scalping it a couple days, or maybe just for the day or for the week. You could use a 5-day, 15-minute chart. There's your average price. Here's your lows. Here's your highs. This is the +1 deviation. That's the lower -1 deviation. Here's where the smart money buys. That's where the smart money sells. Smart money buys. They don't get stopped out right here, and they sell right here. That's the beauty of deviations. They give you an idea of support and resistance and at what level of deviation it does. Right here is basically 1.5 deviation, right? Boom, comes up to the second deviation. Now remember, -1 to +1, 68% of the time, or 70% of the time or so, it stays within these 2 yellow lines. -1, +1, +2, -2. Okay, it's around 85% of the time it stays within the blue. Okay, now if you're really, really patient, really, really smart, you wait for it to get down here to close to the blue, and you wait through all these big massive moves, really high, really low, really high, really low. It comes up, hits your your positive 2 deviation, and you make a massive move right there. You go from $96 to $108. Not a bad day. Okay, and then within the deviations, again, you have negative 0.5. Every single line represents support and resistance. So here you see you have resistance at the 1 deviation. Here it got up to the 1.5. Right here 1.5 mostly. It did pop up there. Came up here to the 1, pop back down, hit the 1 again, pop back down. So those are things that you want to keep in mind when you are, that's why I like the deviation setup. It gives you an idea of what's going on with the movements. I don't use moving averages. I have this up for teaching and things like that because it's a lagging indicator. But I will look at it for confirmation, especially after it breaks. This common strategy is you don't get in after it breaks. You wait until it comes back down and touches it, and when it bounces off it, then you get in. Me personally, we come down, we get close to the second deviation. It's so rare that it gets under that. I'm going to get in, right when I start seeing it come up, I'll get in here versus waiting for the moving average strategy, which you wouldn't get into right here. So, and vice versa. It gets up to the 2 deviation, good enough for me. I made money, I'm out. And, it doesn't cross until right here. You would have missed out on that money right there. So, so that's it with the trend lines. Again, our support lines, horizontal support lines. Deviation is the vertical lines. So here's your support. Here's the resistance. Right here, support right there. Resistance, support, resistance. So just remember when you bounce off of support, then you hit resistance and you break that previous support, what happens? That support then becomes resistance. I call it the ceiling, or the floor becomes the ceiling. Okay? And then the ceiling, after you break it, becomes the floor. Okay? So support lines change. They're not good or bad. They just show you where movements are. And what used to be resistance will then be support, and vice versa. So that's what I mean by the ceiling becomes the floor and the floor becomes the ceiling. Trend lines, again, guys, I highly encourage you to use them. They're very they're easy to do once you know how to put them in. You could do that. Or you could, after the breaks out, you could do that. And once it breaks, that will give you an idea that the trend is changing. Here's your support, and then there's support. Oh, look, the support was going down, now it's going up. Oh, hey, this is going up. Oh, broke support, now we're in a downtrend. So, kind of looks like a swan, doesn't it? All right, guys, I rambled on enough. Again, sorry, guys, I've been out all week, but I had just a vicious stomach flu. No, it wasn't COVID, so no big deal. And I hope you guys have a really good day. I'm going to try to do a video tonight on the stocks, and I'll let you know on that. Well, when I do it, you'll know. And if not, if the wife, God take care of her, I won't be able to. But if I do, I'll do one. But if not, you guys have an awesome New Year's Eve. Take care, be responsible. Please don't drink and drive. All that grandpa stuff. But have fun. Enjoy the year that you had, the ups and the downs, the failed HCMC moves, along with the brilliant SPRT mega squeezes. Just look back and just appreciate that you were able to do these things and get smarter through trading throughout the year, and use that experience to get more and more green as we go on this year. So you guys take care, have a good New Year's, and we'll see you later.